The one question on everyone's mind is, when does this end? When is the stock market going to turn around? Now, in early March, it looked like the rebound might be now. The market's risen drastically, very quickly. With me today to discuss this is Jill Schlesinger, editor-at-large of MoneyWatch.com. Hello, Jill.
Hi.
All right, how do we know that this is a real rally and not a bear market trap?
Well, the problem is we won't know till more time elapses, and then all that time will have elapsed and you would have either gotten in at the wrong time or the right time, but it will not be confirmed until time elapses. This is actually a very normal feature of a bear market. Violent upswings within a general downward trend. We saw it actually in the 30s. 1929 to 1930, the market was up almost 50% before falling again by 80%. So these can be traps. We have to be very careful about not getting too excited about every 20% rally.
Well, then, is the right thing to do to wait until the market pulls back to put some of that cash that's been sitting on the sideline to work?
Well, if only we knew when that moment was, and that's the problem. That's really one of the biggest problems about pulling out of the market. You actually have to make two perfect decisions. You have to know when to get out, but you also have to know when to get back in, and no one is that smart. So as investors, what we're forced to do is say, hey, I'm not going to be smart enough to do that, so I'll be continually investing, adding at these levels that are lower rather than trying to guess where the bottom or the top is.
How can it be a bottom? Let's say it is. Let's say we're lucky and it is. How could it be a bottom when the economy is still in such terrible shape?
It's a very interesting and confounding fact that the stock market looks forward. So perhaps the economic data that looks backwards will still be pretty rotten for the next 6 months, but maybe the market's going to look ahead and say, look at all the stimulus that's coming. Look at what the Federal Reserve is doing. Look what's happening internationally. All of these policy actions will have a positive effect on the economy. We will come out of it. Let's buy stocks. That's why the stock market goes up. However, if investors are wrong, we're going to see a retreat right back to those levels that we saw in March and in November.
Investing correctly means doing the thing that is the hardest. Putting money in when the market is down, pulling it out when it gets overvalued. How do you talk yourself into doing the right thing?
I think the best way to do it is to not try to make a huge decision one way or the other. So what you say to yourself is, okay, how much time do I have? Do I have 10 years? Okay. If I've got 10 years, then I can afford to take my lumps along the way. And frankly, Eric, if you look back, you say, in October of 2007, I was putting money into my 401k plan when the market was 50% higher. Now, emotionally, you felt good. The market was rising. But actually, you're better off today because you're buying assets at a 50% discount. So if you can drill some of those basics into your head, I have time, I have a diversified portfolio, and I'm not going to try to outguess the market. I'm going to be a consistent investor. You'll be a happier investor as well.
Makes sense, Jill? Doesn't sound that easy. Simple, but not easy.
It never is. It never is. And this is going to be a challenge as an investor for your whole life. It's simple, but it is not easy.
All right. Jill, thank you very much.
Thank you.
I'm Eric Schurenberg for MoneyWatch.com. Thanks for watching.